Welcome to the Thomson Reuters Idea of the Week and Alpha Now. I'm John Cozy. ECB President Mario Draghi helped the risk-on trade in late July with his defense of the euro. You can see that in this Datastream chart of the S&P 500. But the latest Q3 forecast for the S&P 500 show corporate earnings and revenues may have investors favoring the risk-off trade. Here's why. Thomson Reuters proprietary research aggregates analyst data and calculates growth rates for the S&P 500. That data, in the red boxes, shows the first 2 quarters of 2012 produced year-over-year earnings growth of more than 8%. The Q3 earnings forecast is for negative 2% growth, while Q4 is higher at 10.4%. But that Q4 figure is down from 16.3% in April, and the negative momentum continues. That's because analysts began lowering their estimates just as Q2 earnings started rolling in. If Q3 comes in weak by around mid-October, expect Q4 estimates to get hit again. Companies can make adjustments to beat earnings over the short term, but dealing with shrinking revenue growth is an issue. They can't just cut their way to earnings growth forever. Maybe that's what we're seeing with the negative Q3 earnings forecast. This chart shows actual S&P 500 quarterly revenue growth in the red bars. You can see recent analyst projections in the blue bars. The actual S&P 500 index is in green. This year's second quarter revenue growth was only 0.8% year over year and has been steadily shrinking since its peak in the second quarter of 2011. The market declined in 2007 ahead of the ultimate drop in revenue growth. Could the market remain higher on the hope things will be turning around? The current revenue growth projection for Q3 in the purple line and barely visible shows a drop of 0.1% for the S&P 500. And as we said before, analysts may cut their forecasts as we get closer to the end of the year. So the Q4 estimate of 2.3% revenue growth may well get whittled down. While the U.S. economy might not be stalled yet, the flattening of revenue growth can get more people cheering for more QE. This has supported stock prices in the past, but that was after stocks fell by 42%. This time, the impact on stocks may be different. And a global downturn may just chase away those who got into the risk-on trade back in July on ECB President Draghi's "Save the Euro at Any Cost" remark. For the Thomson Reuters Idea of the Week and Alpha Now, I'm John Cozy.